Press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. Today is May 30th, 2019. Again, it's another episode of CFRN Thursday, where we go over the CFRN trade setup in slow motion. Okay, what we'll do is we'll spend an hour in here. Number one, I have to go over the disclaimers. So I'll take probably 5 or 10 minutes to knock those out. Second thing on the board is to go over the trade setup. Okay, so what Michael is doing in the training session, we'll execute. Okay, I'll go over and dissect, and I'll do it in slow motion. Okay, then after I go over the trade setup, then what I'll end up doing is going inside a live market. So let's do this. Come on, computer. There we go. We'll go inside the live market. We'll use that same setup that we went over and find the opportunities in the marketplace. Okay. The platform I'm featuring is DtPro. That's the platform that I support, and it's also the same platform that Michael and Dwayne use. So everything will be off of this. Okay, off of this platform. I will go inside the market, and we'll go inside the DOM here. That's the tower over here. So let me get my marker out. Okay, I'll go inside the DOM, and I'll put trades on, and I'll take them off, and I'll manage them in front of you. Okay, again, I'll do that in slow motion, so you guys have a grasp of, how can I get in? How do I manage to stop? How do I move stops? When should I exit? All that other good stuff. Okay, so that's it. And then along the way, you guys can ask questions, and I'll see them pop up in the messenger. And another warning is that this is live, and I have phones that are going to be buzzing. So on occasion, I might have to put you guys on hold and hit the mute button. Okay, so be prepared for that. But other than that, we got some markets that are moving, so maybe we can find some opportunities to take advantage of, and really give you an eyes wide open approach on how this works. Okay, the guys that are brand spanking new, this is going to be a great cheat sheet for you to lean on. Good syllabus on day one. Again, my goal for you is to get an eyes wide open approach. So at the end of your trial, when you get the offering from CFRN, you have a foundation to build off of, on whether you want to pursue this or not. Okay, you have a week in there, so I think this is a great starting point to learn what's going on, to learn some of the buzzwords, the setups. So when you're in the training room, you're absorbing what's going on. Because in the training room, Michael's got 2 hours, and he's trying to get a goal. And sometimes things go fast. So over the years, there was a demand to slow things down. And I raised my hand and say, look, I do this every day. I've been doing it for 8 years, so I know the setup, so I can teach the class. So that's why I started this. So it's a mutual benefit, right? If you guys do well, I'm going to do well. So it makes sense. The guys that are already CFRN members, we have, guys that are in here. This is your chance to spend time in front of the screens, learn the personalities of the markets that we're trading. You guys get to ask questions. The guys that are in this room might be spinning their wheels. Maybe they're not getting it. They're they're falling in some of the traps that I'll highlight. For you guys, I'm going to point out some things that really, I think, one, good habits to practice. Number two, some traps to look out for, some common mistakes that people make. I know this because over the years I've exchanged emails with CFRN members where they'll send me their screenshot. They're wondering, is this a good trade? Is this a bad trade? I'll critique what they're doing in a sense, okay? And so I'll be able to give you guys some decent intel on whether you guys should be looking out for the right things or not. So you guys definitely have advantage of being here because you'll get to learn that stuff too. So and that's the game plan. Okay, so the first order of business. Here we go. All right. First order of the business is disclaimers. So let me change screens. I see a lot of familiar names in here. So the guys, if you've been in and out of the room here over the several weeks, if you want to get a cup of coffee now, that's cool with me. No hard feelings. This will probably take me 5 minutes, and then you can pop back in. It's up to you. Okay. But for the new guys, and that's what this disclaimer is all about. And normally I could just tell you to take a few minutes and read it and then throw them under the blanket. My idea is to explain what this disclaimer is. It's a warning label, basically for those guys that are brand new. Okay, guys that are learning what futures are, what is, what's the leveraging involved, what are the risks involved in doing this. And the bottom line is this, you can lose everything and some in your trading account if you don't have stop losses, if you don't have a trading plan, if you're not engaged in the marketplace, you're not engaged with your trading account, you're familiar with the news reports, you're not doing a handful of those things that I just outlined, this disclaimer will hit you right in the face. And with almost 25 years of doing this, I really have seen the good, bad, and the ugly. So that's why I don't like to gloss over this point. Okay. The good thing is, if you are thinking about going down the CFRN path, we do have a trading plan, right? We have 4 set of rules. Every trade has an 8 tick stop attached to it. Okay, so that's checked off the list. You're going to be on a 4 tick range chart, right? So you're going to have to be actively engaged in the market. You're also going to have to be in front of a trading platform, whether it's DtPro or something else. You'll be engaged in your trading account. Okay, and if you're wondering about news reports and you have DtPro, if you just go to the very top here and hit research and ideas and hit economic calendar, well, you'll be in tune with the daily reports. Okay, and CFRN members and what they're taught is they don't trade around news reports. So if something comes out at 7:30, you put the DOM down, you wait for the action to take place, and then start looking afterwards. Okay, we don't trade when news reports are coming in. Okay, so the bottom line is this warning label is out there, right? And all those things that I just went over about not having a trading plan and stop losses and not being engaged in your trading account in the marketplace, that could be watered down a little bit, okay? Because CFRN checks all those boxes, okay? Now, in the end, if you do all the right things, okay, and you do place that stop loss, okay, like you're supposed to, 8 ticks away, okay, there is still a possibility if we get another tweet, if something comes out, some bad news or something, your stop loss that you following a good discipline you placed could not get it, may not be executed. Okay, so that means you would have unlimited risk in the marketplace. Okay, so like I said, over the last 25 years, I probably have seen it since we've gone electronic. I don't know, I might have seen it a handful of times at the most. Okay, and it's usually centered around news items. Okay, but I've only seen it a handful of times maybe. The fact of the matter is, if it does happen, look, you're going to be glued in front of the screen. And if it does happen, you can hit this hotkey here, which is called exit at market and cancel, and get out of the trade, period. All right. So that's the worst case scenario. It's not a great way to start a webinar, but it's something we have to talk about, and that's why I do it. because it is a reality, and it's something that's out there. You should be aware of it. One of the goals of the webinar is an eyes wide open approach, right? Especially the guys that are brand new. Well, your eyes should be wide open to that fact. So the other part of the disclaimer is that the funds in your trading account should be risk capital. In other words, if you lose all the money in your trading account, it doesn't change your lifestyle. Okay, it's going to be hard to swallow. You're going to be mad, upset, but the bottom line is, if you lose the money in your trading account, is it going to change your lifestyle? So it's got to be capital that you can afford to risk. Okay, those are the two main highlights of that slide. Okay, now the second part is my relationship with CFRN. Because Bert from Daniel's Trading, that's who I work for, and that's the platform, the DtPro. Okay, I don't work for CFRN, and CFRN doesn't work for Daniel's Trading. Okay, there is a fine line in between us. Okay, and the bottom line is that the indicators are property of CFRN. They're a third-party app. They're an indicator software trading tools. Okay, they're the educator. Okay, so all their indicators, which you see in front of you, are built inside my platform called DtPro. I support the platform, the brokerage, the execution, if you decide to go down CFRN path using DtPro. All that stuff, you would reach out to me directly. Okay, if it's, hey, I want to be a CFRN member. What does it take? Who do I pay? You're going to reach out directly to them. Okay, that relationship is between you and them. Anything in the members area, the Thursday night workshops, Logic 247, right? This product, the videos, anything that's on their site, you'll reach out to them directly. Valerie's been added, and she's a valuable asset to CFRN, so you can always get a hold of her. A lot of guys will reach out to me because they know I'm going to pick up the phone here at the trade desk, especially if Dwayne's on the radio and Mike's is, doing planes, trains, and automobiles. Okay. The bottom line is that, people know they can get a hold of me. They call the trade desk number. Okay. And Valerie is usually an email away too. Okay. But the bottom line is there's no commingling. They don't share in the commissions or anything. It's just there's a divider in between the both of us. Okay. And the relationship started probably 8 years ago, I think, 9 years. I don't remember, but I ran into Dwayne, and Dwayne at the time was just doing radio. And he said, "Hey, why don't you pop in? Why don't you pop in on the show, and you can add some valuable content, talk about markets, answer any questions, stuff related to that." And the common thing that I saw in the messenger box was, "Hey, teach us how, teach us how, teach us how, show us what you're doing, how you do it." And a relationship started. Mike got a hold of Dwayne got a hold of Mike, and both of them are TradeStation developers. The platform I support supports easy language. It was kind of perfect timing. And so they coded the indicators inside DtPro, so they can do the teaching, I could do the support. So it kind of worked out. So and since then they've been growing. So it's worked out. All right. So that is the scoop. That's the two disclaimers. Again, I don't like to throw them up there. I know it's a bad way to start a webinar because I'm supposed to get you, all excited about what the new and exciting things. But, again, eyes wide open approach starts with disclaimers and possible risks. And so that's why we discuss those things. So we don't want to gloss over it. All right, let's stop being Debbie Downer and I'll work on the indicator set. Okay, so here we go. Let's get rid of that personal emails and let's get here. All right, First order of business is the 4-tick range. We got to get on the time-based that Michael and Dwayne are on. Okay, Michael in the room is on a 4-tick range chart. So the question is, how do I get there? I have DtPro. How do I get there? All right. So you know what? Let me do this before I forget. I'm going to shut down the live platform. All right. Now I'm in demo mode to be very clear. Okay. All right. 4-tick range chart. Okay. Chances are, if you're brand new, you're probably on an hourly. You might be on a daily. If you're following logic, you might even be on a 30-minute chart. Okay. The ideal is to dial it down to a 4-tick range. So what you're going to do is next to the time frame, you're going to hit the drop down box here. There's an arrow. Left click and hit custom and select range bar. Make that one look like 4. Okay. That is the 4-tick range. If you have the ES chart up, that is the S&P E-mini on a 4-tick range chart. Okay. The one trap that people fall into, they go down to custom, they select tick bar. Okay, they make the 2 look like a 4. Your chart starts looking like this. That's a big red flag. That's the first trap. Just remember, it's a range bar. The reason why it's a range bar is that the height of each candle is 4 ticks in height. Okay, 4 ticks in height. And there's some advantages to that, all right? And I'll get into those. But the bottom line is, what's happening is, and especially if you're brand new, you're going to start hearing Michael call out the highs and lows of the candle, okay, the previous candle. And what he's doing is preparing himself to be proactive. Okay, in other words, he's going to get ready to place an order in advance in the event that the market takes off. Okay, so if all these rules are in motion, okay, if all of those are in motion, okay, they qualify. You're going to start hearing Michael talk about highs and lows. And what he's doing, okay, is he's preparing himself to either get long above the current market price, and that's the market's right about here, or get short below the current market price, depending on what the scenario is. Okay, so he's getting in on a buy stop, which would be above the market, or he's getting short below the current market price on a sell stop. Okay, that's how he's entering in. Because what will happen is sometimes the market will just blast off or really break down. Okay, and what he's doing is just going with the momentum of the market. So if the market does do some kind of blast off or breakdown scenario, he's going to be involved. Okay, so that's why he's doing it. So I'm preparing yourself. You start hearing him call out highs and lows. He's getting ready to place an order above or below the market. Okay, so just a warning. That's what's happening. Okay, you may not pick up on it on day 1, but on day 2 or 3, you'll be like, oh, that's what he's doing, and I forgot that's what we talked about in the beginning of the webinar. So you'll put the pieces together. It'll hit you in the face after day 1. Okay. He doesn't do that all the time, but when it does, you'll see why. Okay. Let me tell Clark I'll call him back. 1 second. Hey, Clark, let me call you back. I'm going to be tied up for an hour in a webinar. All right, cool. See ya. All right, bye. Sorry, I didn't hit the mute button, but that's okay. That's just Clark. He's been with me for about 20 years. All right, so the time-based, that's what we were talking about. So we're on a 4-tick range chart. Get rid of this. Here we go. 4-tick range chart. Okay. So now, the top portion of the chart that we're going to work on. Okay. So here are the buzzwords. The red and blue line is referred to as the MA1. Okay. Nothing fancy about it, just MA1. The green line It's referred to as the BBC, okay, the green line. That is short for bullish and bearish cross, okay, because together that makes up step number one, okay, which is this. If the MA1 is red and crosses the BBC, that's a bearish cross. If the MA1 is blue and crosses the BBC, that is a bullish cross. So the one that's highlighted here is referred to as a bearish cross because the MA1 is red. Okay, so that sets everything in motion. Okay, if I get the bearish cross, I'm looking for shorting opportunities. If I get the bullish cross, where the MA1 is blue here, I'm going to be looking for bullish opportunities. Okay, now note that I said opportunities. Okay, I didn't say go short here, go long here, go short here. Okay, I said we're looking for opportunities because that kind of leads us into step number two, okay, which is this. After the cross, the normal thing for the market to do, the normal thing is for the market to gravitate toward that green line or our BBC. That is the normal thing. So we're looking for the market to do that. So we're looking for a touch of the BBC, but then a close in the direction of the trend. Okay, the trend was identified by the cross. That's why it's step number one. If we get a red MA1, then we should be looking for a red candle. Okay, if we have a bullish cross, okay, we would still look for a pullback to the BBC, but we'd be looking for an up close or a blue candle or a green candle. Okay, no, we're not selling it right against the green line. We're not placing an order here. Okay, we're waiting for a close in the direction of the trend. We're sacrificing price for action because sometimes a market will just blast through that BBC and take off. Okay, so that's not why we're just setting an order here. We're sacrificing a little price for action. A little bit more confirmation. Okay, so step one, the bearish or bullish cross sets everything in motion. Step two, the normal thing is for the market to pull back to the BBC, and we look for a close in the direction of the trend. Okay, those are the first two things that go into motion before we do anything. The third thing is after this down close, our eyes are going to gravitate toward the oscillator portion of the chart, what we call the slingshot. Okay, and some buzzwords here. It's pretty simple, but the red and blue line is referred to the cycle, and the green line is referred to as just simply the green line. Okay, but here's the breakdown. Here's what's going on in the slingshot, because the trade exists down here below. Okay, so follow along. What the cycle is telling us in this scenario is, you know what? We have some bearish momentum in this market. Okay, because the cycle is red. Okay, so we have a red MA1 at the cross saying, hey, we're looking to get short. We just looked at the market doing the normal thing, which is pull back to the BBC and then gave us the down close. But we also have an indication that says, hey, we have a red cycle and the momentum is bearish. Okay, everything is the same color. There's a common denominator here. A red MA, bearish cross, red candle, and a red cycle. When everything is the same color, that stacks all the probabilities in your corner. Okay, It doesn't happen all the time, but when they do, there's no other filtering to do. Okay, it's just go inside the DOM and execute. So you're looking for this ideal scenario. Okay. Now a step further. The momentum is bearish here, right? That's what we just defined. Now this green line is pulling away from that cycle. The green line pulling away along with this price action is suggesting this is just an air pocket in this ongoing downtrend. So that's why we're waiting for further proof with this down close. Okay. So with the green line pulling away, along with the price action up here, which by the way is normal, okay, this separation that's highlighted here is the divergence or the separation that Michael is talking about in the training room. Okay. So when this is present, step 1, step 2, and now step 3, okay, we're going to go inside the DOM and get short. Okay. Because in the end, here's what we expect to happen.
You're up like $600 on it right now.
Ultimately, the green line is going to come down and gravitate and touch the cycle as it does here. Okay. This is the normal thing. The green line pulls away and then comes down and touches the cycle. And in doing so, the market is going to make a new pivot low. And when these two things are happening, this is where we're getting out of Dodge. This is where we're exiting the trade right here. Okay? This is our exit strategy. Our exit strategy is when the green line pulls away and does a normal thing when it gets into the cycle. Okay?
The 57 puts that were.
That's it. That's the trade. Now, why does it exist in the slingshot? Because what should happen is the green line gets into the cycle, it pulls away. Gets into the cycle, pulls away. Okay, continues that until guess what? The momentum's turned bullish because now we have a blue cycle. And so now what we're looking for is this line here, the green line, to get underneath it and create bullish separation. Okay, so in the end, what we end up doing is selling the stop, selling the stop, selling the stop, top, and then buying this dip and buying this dip. That's why the trade exists down in the slingshot. Okay. In order for this all to take place, the number one thing that needs to be happening is we should be trending. We should be making lower lows. We better be making higher highs. All right, in the grand scheme of things, that is the number one thing that should be happening. Okay, because when you sign up for CFRN, you're not learning to pick the top here or the bottom here. Okay, and you're not learning to trade it from point A to point Z. The game plan is to take a piece out of the middle. And along the way, you're going to trail the stop, trail the stop, trail the stop, trail the stop until guess what? That green line gets into the cycle and then we just close out the trade. Okay? That is the game plan. You are scalping on a 4-tick range chart. Okay? So that means you're going to have to be glued to the screens. You're going to have to be in front of the chart, the platform. Okay, you're going to have some discipline and learn the rules that we just went over. Okay, not only that, you're going to have to learn this crazy thing here if you're brand new, which is this tower here. This is the depth of market. This is where we buy it, and this is where we get short. So you're going to have to learn this. Okay, so you're going to have to learn whatever's going on here. You're going to have to translate it into an order. Does that happen overnight? No. The guys that have some familiarity with the platforms or other platforms, yeah, they have an edge. Okay. They also have a disadvantage because chances are they bring some bad habits to the table too. The guys that are rookies, they don't know any better. Okay, so the guys that are brand new have a tendency to follow the rules because those are the rules they only know. The only thing where they fumble the ball a little bit is right here in the tower. That takes time. And what CFRN promotes is paper trading. I don't know what that is. Okay. And I understand paper trading isn't the same as the live. Okay. Emotionally, when there's real money on the live, it's totally different. It's the mechanics. Okay. Learning how to push the buttons and trailing to stop and looking at the rules. Okay. Going through the motions is a big deal. Okay. Because those are the little things that'll give you the confidence to push the button. And then when you're winning and losing and you go on that emotional roller coaster ride, well, you know, maybe that helps you handle it a little bit better. I don't know. Everyone's different. Okay. So that is the setup. Okay. Now we get some curveballs along the way. I'm going to go over the curveballs. Okay. So we'll go over those as a setup. Okay. So that's it. So let's see what happens here. Okay. So if you're brand new, first thing that should be on your piece of paper, maybe you're not, maybe you are a CFRN member, but you're just hanging out here for the first time. The first thing that should be on your piece of paper is, are we trending? That's what Bert said. That should be on the top of your piece of paper. All right. The second thing underneath that should be, Bert said to get in the habit of hitting the zoom out button. Okay. Hitting the zoom out button so you can see what's going on over to your left. Okay, that will help you identify whether a market is trending or not. So it's a different trading. You don't have to go to a 30 minutes. You don't have to change time frames. All you have to do is hit the zoom out button. Okay, just this red magnifying glass will help. Okay, that might be the difference. If you're spinning your wheels, that might be the difference in whether you're making money or not. Because what you might end up doing is you might be trading inside a sideways market and you don't even know it. Okay? So hit the zoom out button because that's what I said to do. Okay, and that should be on your piece of paper. All right. Monday. So now we're looking at the ES. Okay. The question is, are we trending? Are we making lower lows? And the answer is yes, we are. We are making lower lows. Okay. Sometimes we get hypnotized by what we see on Mike's charts because those are blowing up pretty good. So you might be looking at something like this, right? Oh, we're stair-stepping down. Okay. But if you zoom out, what you might find out is, well, maybe we're not because we did find support here the first time around about an hour ago. Okay. So that's why I have you zooming out just to make sure, are we trending? And by the way, if you're not sure, just don't do anything. Okay, it has to be easy and obvious. Okay, so we answered the first question, right? Are we trending? And Bert said, yes, we are because we're making lower lows. All right, so after the cross, the normal thing for the market to do is to gravitate toward the BBC. There's the cross. That's where the MA1 crossed the BBC. What color is that MA1? It's red. So we're looking for shorting opportunities at this point. We're looking for the market to gravitate toward this green line. And you notice it's done it a couple times along the way. Okay, so there's the truth to it. Okay, after the cross, it's normal for the market to gravitate toward the BBC. So that's what we're looking for the market to do. Okay, if we're forgetting about trend, notice bearish cross, pull back to the BBC, and here is the down close. We have a red cycle, and we have a little bit of bearish separation. Okay, so it meets all the criteria, with the exception of it's not trending. Okay, here's another example of it where we touch the BBC and we also have the down close. Okay, we also have some bearish separation. And as I said earlier, the normal thing for the market to do, well, what we expect to happen is the green line to get into the cycle and the market to make a new pivot low. So a lot of that is happening right now in ES. Okay. Now, here's the other thing that I want you to get in the habit of doing. First habit was hit the zoom out button, right? The second habit is this. As soon as you get this cross, whether it's a bullish or bearish cross, you are to activate the trend line. Right there. You have DtPro, that's what you should be doing. Okay? Here's the reason why. Because as soon as we get the cross, we are going to activate the trend line, and we're going to get in the habit of drawing trend lines as the market approaches the BBC. Okay, this is the habit we're going to get into. There's the reasons why we do that. Number one, we never know if it's going to do the normal thing and get back to the BBC, right? We don't know that. Okay, but if it does something like it did here, so in this sequence, right? If it has so much bearish momentum it can't get to the BBC, and it closes below the trend line like it did here, and we have this bearish separation, that's a trade setup right there that we would normally take in the training room. Okay, it's saying, look, it meets all the criteria, even more so because it can't do the normal thing, which is get back to the BBC. And so when that's present like that, time to take action, and that means we'd hop into the dome here and get short. Okay, so that's the reason why we get in the habit of drawing those. Okay, because if it does happen, we're not fumbling with a trend line and trying to do it after the fact. We're doing it real time. So when it does, it's a push of a button. Okay, the other reason why we do it is the cycle. At some point, the cycle could turn color on us like it did here. Remember, as I said earlier, this is good for the home team, right? In a bearish scenario. Okay, when everything's the same color, there's no filtering to do. Okay, it's just take action. At some point, you're going to get a cycle that turns color. It's going to turn the opposite color, blue, in this example. If it does, well, the trend line is required, and a close below the trend line is also required. So that's additional filtering I was just talking about. All right, so to slow this bus down, okay, here's what you're going to do. As soon as you get the cross outlined here, okay, you're going to get in the habit of engaging the trend line, and you're going to get in the habit of drawing trend lines. Okay, that's what I'm telling you to do. And then underneath that, what I want you to write down is the reason we do that, because A, we don't know if it'll get to the BBC, but that's important to us. And the second point is if the cycle does turn color on us, like it's doing here, right? It's turned colors. Well, a trend line is going to be required, okay, like this. And a close below that trend line is going to be required, like this, okay? So you notice how we can draw up the trend line in advance, okay? And when it does happen, we can just go inside the DOM and execute, okay? All right. A lot of examples there, a lot of information. That's why I recorded this, and you can hit the rewind button as many times as you want. Okay, here's what's going to end up happening too. You're going to have a bunch of trend lines drawn on your chart, right? Here's a quick way to get rid of them all. See this little box down here? It says select all. Left click on it. Notice that X just highlighted, darkened up a little bit. If you left click on it, that gets rid of all of them, okay? All right. So that's the scoop. All right. So let me change markets. Let's go to maybe something else that looks a little bit more easy and obvious. Okay. A few more examples. There. There. Okay. Here's another trend line. Okay. Bearish cross was set back here. Okay. So we're looking for shorting opportunities. Normal thing for the market to do is gravitate toward the BBC. We draw the trend line because we don't know if it'll get there. Good thing is, cycle was red, and not only that, it had a good slope to it. Mark that down. Slope. Good slope to it. All right. Not only did it react off the BBC, not only did it have a down close, it also closed below a trend line. You had the bearish separation here. The normal thing for the market to do, green line to get into the cycle, the market makes a new pivot low. Okay? Happens again here. Notice the cycle turned color on us, so that trend line was required. Okay? So there was a lot of things with the crude. So the question, which is on the top page, right? On the top of our little page we have writing things down. Were we trending? Were we making higher lows or lower lows? Now notice I went from here to here. Okay. Well, back here, were we trending? No, because we had a support line here. Were we trending here? Yes, it was more easy and obvious because we were making lower lows. Okay. So the question is, are we trending here? No, we're not. Low here, low here. Okay. No, we have to make a new swing low before we can get short the crude. Okay. All right. A few things to talk about because it's hitting us right in the face right here. The normal thing again for the market to do is to gravitate toward the BBC. You sound like a broken record, but you'll get into the habit. Here is our first down close. Okay. This doji. Okay. We said earlier the cycle turns a different color on us. That trend line is required. Well, we did a good job of that, right? Let me get rid of this. Okay. Right there. Okay. This is blue. Trend line is required. Here is the down close, right? That's the first close below the downtrend. Two things that are hitting us in the face, which are disqualifiers. Number one, the cycle's the wrong color. Now we know that waters down the probability, but now it's at a 45-degree angle against us. We're swimming against the tide. Okay? When that happens, that is disqualifier number two. Okay? We take no action. Okay? When this slingshot or the cycle is the wrong color and we're going against us at a 45-degree angle, that is a disqualifier. Do not push any buttons. The other thing too is the black step line. It's great for trailing stops. Okay, if you're following logic 247, you know the black step line has kind of that same meaning, right? The other thing is, once we get the down close, which we did here, and the black slingshot is piercing the BBC as it does here, that is disqualifier number 3. Okay? So, usually this, okay, disqualifier 2 and 3 work hand in hand. Okay, you'll see that often happen at the same time. Okay? So basically we have 3 disqualifiers. Number 1, a lack of trend. Okay? We had a double bottom here. Okay, that's a warning flag, right? Number 2, that cycle was moving against us at a 45-degree angle. It's the wrong color. And 3, the black step line just pierced the BBC. These things work together hand in hand. So in the end, what does that mean to you? Number 1, you don't do anything. Don't push any buttons. Don't get into the market. Okay? Just wait. Because what this is suggesting, this action down here, no matter what happens in the end here, usually means chop. But now that this has turned blue, we know blue is actually means bullish. It actually means we could actually go this way. Okay. So most times than not, that's what will happen. Now there'll be cases where it'll fall apart, and you'll say, you know, Bert told me in this webinar not to do anything. Now look what happened. I would have made all this money, and he stinks. Okay. No, in the end, in a large sample size, I will be right. It will trade sideways, and it will work against you, and you will avoid the stop outs. Just pay it. Just take that when I tell you. Okay. I've been staring at this for almost 8 years. This is usually the case. So in the end, you should be doing things that are a little bit more easy than obvious. Easy and obvious, right? All right, we're going to clear the trend lines. How do we do that? Select all, hit the black X. Notice crude is screwing around. If you didn't take any action, especially here, you're getting grief. Okay? All right. Natural gas. Okay? First thing we do, are we trending? Okay? We had the bullish cross here, so we should be looking for bullish opportunities. Are we trending? No, we're not uptrending. If anything, we're trading sideways to possibly low. Okay, so when I see this, I do see the pullback here. Okay, yeah, it does go higher, but if I zoom out, we are not trending, we're sideways. Okay, what it does have for it, it's blue. That's good if I'm bullish, but it also has a decent slope to it. Okay, that is slope to the downside. That is slope to the upside. Okay, that's the stuff. You see this. If you're bearish, you like to see this. If you're bullish, you like to see this. But in the grand scheme of things, we want to see a market that's making higher highs and lower lows. Okay, if you're not sure, look at dynamic support and resistance dots. Okay, notice how they're side by side here. That's the first indication. Market sideways. It's confused. Stay away. Okay. So if you're not sure, look at your dynamic support and resistance dots. Okay. Those will help out. So natural gas, we won't look at it. Let's go to gold, and I should be in August gold. Okay. Are we trending? Zoom out, zoom out. No, we're not. We're sideways. Okay. We're sideways. All right, so no action there, and look how small the action is too. Wouldn't expect much out of there. The indices are breaking down, so let's gravitate toward there. Okay, here's that point I was making at earlier. See the down close there? All right, so hold on. Okay, we're looking at the ES. Are we trending? Definitely making some lower lows. Okay. We draw a trend line because we expect the market to gravitate toward the BBC, and there's that big fat disqualifier. It's right here, sitting at a 45-degree angle. Okay, so here's what will happen to you. You're going to get excited because the market's breaking down. Okay, and you'll get this close, and this is a qualifier. Hey, this I drew my trend line and it closed below the trend line. Okay, so you get short here. Okay, now, is my risk off the table at this point? Yes, because the market has gone 4 ticks in your favor, right? All right, but you're facing with this guy here that says, hey, you know what, the momentum might be changing, we might be heading up or sideways at best. Okay, that's the disqualifier I'm talking about. So the result is a break even because you would have been stopped out. Okay, or it's just going to trade sideways here. If it falls apart, it does. In all fairness, you're stopped out at break even. Okay, so that's that trap I was just talking about. Okay, so we're not going to do anything there. Let's go to the currencies. Let's go to the euro because Michael has the euro up a lot of times. Okay, here is a market that is trading sideways. Okay, no higher highs. Okay. Oh. I might be hooked up. Don, is that you? Or not? Ernie? Okay. Anyways, yeah, someone was in the background there. Actually, let me hit. There we go. I think we're squared away. Sorry about that, guys. Here's the euro trading sideways, and we did have the pullback to the BBC, right? So here, I want to do something because I want to show you. Actually, hold on. Let me find something that we can possibly sink our teeth in, because I do want to get inside the DOM, and I want to show you how to execute a trade and manage it. Don't fail me now, platform. Uh-oh. Chart went down. 1 second.
Yeah, I agree with that one.
All right, hold on.
Right? Yes. Yes, it is. But, okay. So we find $5.
Okay, let me log into live, see if we're having the same issue. All right, that's a good sign. The demo's back. All right. All right, so let's get back on the track, okay? All right. Talking about trying to find a trade we can get involved in so we can show you how to, okay, maybe there's something here in the British pound, okay? Okay, now, I don't want anybody touching the DOM, okay? Because this doesn't qualify, okay? But we're at a point here where it may or may not, okay? So finally the market pulls back to the BBC. Agreed? It's going back to the green line. Okay? We have a double top here. Okay? It's banging its head against dynamic resistance. So it has a lot of nothing there. Okay? Your trend line would be drawn like this. Okay? That's how I would draw mine. They should be like that. Okay, so now all we're doing is looking for the up close. Now here's something what I can show you. Remember I told you earlier Michael's calling out highs and lows and he can be predictive, okay, because he knows the height of each candle. So we know if the height of each candle is going to be 4 ticks in height, okay? If the low is 126.17, 4 ticks is 21. Okay. So what Michael would do is right click in the green at 126.22. Okay. At 126.22, Michael would be getting long. Okay, he's being proactive. He's getting in on a stop which is above the current market price. Okay, so here's the trick. Just take the lower the high and add or subtract 5, and that's the number you're going to place the order on. Okay, that's where you click. All right, so I have an order in to go long at 126.22. Okay, notice I gave you a couple reasons why we don't like this. Number one, are we trending? No, we have a double top in place. All right, so we need to make a new pivot high. Okay, we're bumping our head up against dynamic resistance, so that seems to be an issue too. Okay, the cycle is turning red on us, right? So that's going to require us to draw a trend line, which I've done. But we're also going to have to get a close above that trend line before we take action. Okay. But here's one cool thing about the DOM here. Okay. So this little button up here, this Tinker Toy triangle, every time I push the button, the bottom of the DOM opens and closes. Okay. This is called a bracket option. It allows me to place a stop loss automatically as soon as I entered the market. Notice how I did that. When I got into it, the stop loss was automatically placed. So if you have DtPro, if you select sell stop and buy stop, just those two boxes there, and if you right click over buy stop and put factor in ticks, and sell stop, factor in ticks, and make the factor in 8, like I've done so, it's automatically going to put the stop loss 8 ticks behind your entry. And you know what? That's our rule, right? 8 ticks. So that's a cool feature to have because that's one less button that you have to hit. Okay? All right. So for the moment, we're not going to get the up close. So I'm going to cancel all and move on to the next market. Let's see if I can find something juicier to do. Okay? I'm going to go to crude oil because crude's down 240 getting its butt whooped. Okay? Look at the sideways action. Notice dynamic support and resistance. Back and forth, back and forth. Okay? Typical when we're trading sideways. When you'll see dynamic support and resistance like this. I'm going back to the S&P, and notice I warned back here, this was not good, and look what happened. Okay, so the result would have been a break even, or if you didn't have the discipline, you got stopped out because you got so excited about getting short. Okay, very typical. Okay, that is one of the biggest traps people fall into. Okay, you got to watch this, guys. All right, if it's the wrong color and it's got a decent slope to it like this one does here, that was pretty easy and obvious for me to say, whoop, time out. This is a problem. Okay, so got to remember that. All right, I'm going to try the NASDAQ. If you're crazy about trading the YM, the mini Dow, the NASDAQ, and the mini Russell, a suggestion would be is to go to an 8-tick range. Okay, slow it down. Okay, get on a larger time frame. All the rules apply. The only difference is your stop loss factor is 16 ticks. Okay, 16 ticks. Okay. So let me see if I can't find anything here. We have the bullish separation. Okay. We have the bullish cross back here. A lot of more bullish things than bearish things. Okay, here's something interesting. Here is the ES on an 8-tick range, and we're finally pulling back to the BBC on an ES chart. Okay, notice it happened here, and we had the down close. Okay, it was lacking a trend because we had support here, right? But notice the market gravitated toward the BBC, and there's your down close. And you have the separation, and guess what? That slope I was referring to. Okay? get excited about the slope. So if I were on an 8-tick range chart right now, and I was looking to get short the ES based on that, my trend line would have to be drawn like this, pretty way down here. So we'll table that too. Man, I really want to show you guys something. This may not get it. Still sideways in the crude. Let's see if gold is perked up a little bit. Okay. We are not trending in gold. So I don't want you to do anything with your DOM. Just want you to watch. Okay, here's the pullback to the BBC, and now we're looking for the up close. Here is the Michael thing. Okay, and the green line is pulling away. Okay. This is not good for the home team. We do have the separation. Okay, so here's the Michael trade and advance. So pay attention. Plus or minus 5 from then the current low or high. If the low is 1292.40, then the high of the candle should be 1292.80. Our order is 1292.90. Right click, you're buying it on a stop. Okay, will 1292.90 be above the trend line? Yes, it will. It will. Is the trend line required? Yes, it is. Why? Because the cycle has turned colors on us. Do we want a red cycle? No. Red cycle says waters down probability. Not so good, not so easy and obvious, right? But the trade is there, the trade is on. We're just looking for the market to take this out before we take action. So now we're sitting and waiting. Okay. Are we trending? No. That's another red flag. So don't touch any DOMs. Let's just hope that this gets filled so I can manage the trade in front of you, win, lose, or draw. But this doesn't have a lot of things going for it. So I wouldn't expect it to work out, but we need to pretend like we're putting something on so I can show you what's going on here. Okay. So we're waiting for the market to close above this downtrend line that we've drawn. And then I have that in place already in advance. So there's two ways we can do this. I can do it this way, okay, where I'm going to buy it on a stop. Okay, that's what Michael would do in the training line. Okay, you're going to see that, trust me. Or if we get the close above 1292.80 and we get a close below the up downtrend line, I can go inside the green and then left click. Okay, and then I can left click. So there it is. So now I'm left clicking, and now we're filled. So I am long the gold at 1292.90. I did that by left clicking. I created a stop loss 8 ticks away, right, with this bracket option. Okay, it's 8 ticks away. Now, what are the rules of engagement for managing the trade? Here's the deal. If the market moves 4 ticks in our favor, we move the stop to break even. Break even is our entry. Entry is right here. We're also, this is another place. Your P&L is also moving, plus or minus. And on the chart, it's also present. Okay? So there's several places on this platform that says, you're long, dude. Okay? There's enough spots there. Okay? All right. How do I move the stop, Bert? Here's your stop loss behind the entry. All you have to do is put your marker over your mouse, left click, keep it down, and drag it. Release it. drag it, release it. That's all you have to do to move the stop. That's all Michael's doing in the training. Okay? I would add this to your arsenal. Okay? Hit trading, positions and order management, and working orders. This box should be somewhere accessible at least. Okay? Because this lets you know that there's an order still outstanding in your trading account. Okay? Notice the stop's 1292.10. That's where it is on the DOM. If I move it up, okay, the stop has changed. But if I cancel the stop, notice how it's disappeared. There's nothing in there. So when you get out of a trade, this box should be empty. Okay? When you do have a stop in, you should have one in here. Okay? So that's important. Because a lot of times I've run into people where they said, look, I'm in the market. I didn't place this order. It's your platform's fault. And so then I'll look back in the sequence and I'll say, you know what? You got out of the trade, but you didn't cancel the stop. Or you did something. Okay? If you have this box open, okay, this will tell you whether you have something open or not. So this should be up, whether it's visible or it's minimized. Okay? It should be somewhere where you can find it. I'm just saying. So that's our stop loss, okay? So we're just waiting for the market to cooperate, all right? And if it must move plus 4 ticks in our favor, then we're going to move the stop to break even, okay? So if it gets to 1293.30, we will move the stop up. Right now, it's 1 tick in our favor, okay? So we're just kind of waiting, okay? All right, so while that's horsing around, and I'll come back to it, let's go fishing in another hole. We'll find another pond or lake to put our hole in. Okay, same thing in the ES, right? There's that pullback. I did the same thing with the ES. Here is the pullback to the BBC with the up close. Do you think this is good? Okay, here's our stop loss. Okay, 8 ticks away. All right, are we trending? No. Okay, we're bumping our head up against resistance. Also, how's the cycle look? It's red and curling down at a 45-degree angle. That's not good for the home team either. So what I would expect this thing to do is fall, trade sideways, or just stop us out. Okay? But again, I put the order in just to show you. I left-clicked here to place the limit order to get in. And our stop loss is right behind it, 8 ticks away. Okay? Let's see what happens. So you shouldn't be pushing any buttons. Okay? So it's laboring here. I'm showing you why this trap is a trap that people fall into and get stopped out. Okay? So your entry actually would have been right here. So you'd be stopped out of the trade already. Okay? This was the first up close. And as I said, that's usually a warning. And that's one of the traps. Here it comes. It's grinding it out lower here. And now we have a bearish cross the boot. So that's not good. So that said, the quickest way to get out of a trade and cancel any outstanding orders is hit exit at market and cancel. And this is why it fails. Okay? it started with this. Okay, that's no good. Let's go back to our goal. Okay, we closed on the other side of the MA1. Our stop moves to break even. So the rules of engagement for money management or managing the trade is this. If it moves +4 ticks in our favor or closes on the other side of the MA1, that's that red and blue line, we move the stop to our entry. Okay, so if we get stopped out, the only thing that you're paying for at this point is commissions. If you want to do one step better than that, go 1 tick in front of your entry. Now you covered your cost and some. You'll still make a few bucks. All right. But the idea is get the risk off the table. Okay. Now this looks very similar to that ES chart, but the cycle was turning red, right? But it is what it is, and we just push the button just to show you how to enter. There's the +4 ticks. So our stop is in place. Okay. All right. Let's go back to the ES. Okay. And it's 2 o'clock already. Holy smokes. All right. So I'm going to wrap it up because there's some things moving, like crude is all over the place. So can you see how easy this is? And obvious. This is sideways, man. This should be framed up for a sideways market. Not only is it side by side here, but look at the dynamic support and resistance. That hits you right in the face. That's picture perfect for that. Okay. All right. So we'll close it for the rest of the day here. So hold on. So again, easiest way to get out of a trade: exit at market and cancel. Okay. And notice options and order management, marking orders. It should be grayed out, and there's nothing in there. Okay. Takeaways. Number 1, that first thing that's on your piece of paper, are we trending? That's a big deal. People are getting chopped up. It's because they're trading sideways and don't even know it. And one way to eliminate that, hit the zoom out button, because Bert said to. Okay, that's what I would do. Secondly, the other big deal is the cycle. If it's the wrong color, we already know it's watering down the probabilities. Second, if it starts curling over at a 45-degree angle, like this trade we took here, okay, that is a big trap that other people fall into. Okay, not only did it happen here with this, but look at this, it happened here with this. Okay, so I would write that one down for sure. The other takeaway is after the cross, after the bullish or bearish cross, remember that's defined by the MA1 crossing the BBC. I'd engage this trend line right here. That should be your next motion with the mouse. Okay, engage it, because you have to get in the habit of drawing the trend lines. And if you get in the habit right now, okay, when something does fire, when all the 3 rules are there, it's a simple get inside the DOM and push a button. Okay, you're just reacting instead of trying to fumble around with a trend line and missing potential trades. Okay, so that's what I would do. All right. All right, that's it. And it's been recorded. I'll decode it. I'll put it out on YouTube. I'm sorry for yawning in your ear. But I'll see you guys in the morning. I'll be in the training room. I'm in the background all the time. I let Mike do his thing. And, if he steps away and there's something to talk about, I'll bring it to your attention. But, easy and obvious is a good method. Okay. And, if you have questions, just send me an email or give me a call at the trade desk. Okay. All right, I'm going to shut it down. We'll talk next week. We do it every Thursday from 1 to 2. Okay.